Hello, friends. Welcome to another episode of the Block Thrasher Daily Morning Crypto Update, where we are shattering the complexities of crypto with news, commentary, analysis, and education. It's Friday, March 19th, 7:37 Mountain Time. I am now just outside of Fort Collins, Colorado. From Houston, Texas to Fort Collins, Colorado in just a day and a half. There is snow on the ground. Woke up this morning and it was 24 degrees. So from the high 70s to 24 degrees. Yeah, it's kind of cold, but it's interesting because it's so dry here. This cold is not bad. It was so much worse the other night in Texas. It was probably in the high 40s, maybe close to 50, but crazy windy. And boy, that just step outside and that wind chill hits the body, and that is intense. This is actually not that bad. The sun is coming up. It is beautiful. It's good to be back in mountain country. Looking out in front of me, I wish you could see the view. It's just gorgeous. The trees and the mountains and the sun, the shadows are being cast. There's something about the sky and the way shadows are cast up here that just sort of give everything a bit of a sparkle. It's really cool. I love the Pacific. I love the Northwest, especially. Colorado, Wyoming, Montana, Idaho. Just beautiful, beautiful, beautiful places. Anyway, moving on to the daily morning crypto update. Let's start with our word of the day. Word of the day is gasconade. Maybe you've known somebody who was always boasting and talking about how great they were. I suppose I could do this. I was like, the Block Thrasher Crypto Podcast is the best crypto podcast on the planet. I mean, that is what gasconade is it is extravagant boasting or boastful talk. Gasconade. Gasconade. Kind of reminds me of gaslighting. Similar word where we're taking conade and attaching gas to it to bring together a word which means extravagant boasting, boastful talk, gasconade. All right, let's take a look at what is happening in the market. We saw the market just turn yesterday. In the morning, it started out looking like the market was on fire. I mean, a lot of the alts were up 10, 15% more. Bitcoin was on the rise. And then it just started to take a turn, especially Cardano. Cardano got hit big, went down negative 10, 15%, and that's where it is today. However, the total market cap is still $1.8 trillion. So in terms of the total crypto market, we're still inching up slowly. Because we were at 1.6 a couple days back, then 1.7, now 1.8. Bitcoin is currently at 60.7% dominance. Ethereum is at 11.6. That's down a bit. It's been not much, just hovering around 12%. Ethereum gas prices are down slightly, 127 Gwei for standard. A little bit of an improvement there. Now, Bitcoin is actually up 1% at $58,579. That's good. Bitcoin just has been pretty stable late. Ever since it hit that all-time high and came back down, it's just been hovering between 55 and just under 60. Up and down a little, but really not that much volatility of late. I suppose that's a good thing. I think we're just sort of trending sideways for a bit before we blast off again. That'd be my expectation. Ethereum is $1,814, up 0.96%. Just barely any movement as well. Cardano is the one that took a hit. It was up 19.57% on the week, but now dropped down 10.34% to $1.28. Why did that happen? A lot of people were asking, and it's interesting because we saw Coinbase. We saw Cardano get listed on Coinbase yesterday, and when it did, there was, maybe a potential arbitrage opportunity if anyone could pull it fast enough, but there was a disparity in the price on Coinbase versus some of the other exchanges. People were saying, it's $1.80 something on Coinbase, and I can go on Voyager and get it for $1.25 or $35 or something to this effect. So when it first initially launched on Coinbase, we saw quite a bit of a spike on Coinbase, and then it started to really come down. And what I'm thinking probably might have happened was that you have some users who have Cardano, maybe even some institutionals, that once it got on Coinbase, they expected a quick pump and they planned to dump to take some profits and rewards off that, because that is something that has happened with other coins in the past where they had this pretty significant pump and then they dump. So that could be one reason for what happened there, or it could be glitches. It could be, there's anything, who knows? Trying to understand how the crypto market works, trying to understand how markets work is something that, is incredibly difficult. Even some of the most famous and best investors of all time, such as Warren Buffett, said he didn't care for technical analysis because it just didn't make any sense to him. And one time he said you could take a chart and you could flip it over and it looked the same, and so that's why he was a fundamental investor, where he invested in companies that he believed in because he liked the team, he liked the product, he liked the market, like he understood all of the fundamental aspects that would give that company or make that company profitable and give it value moving forward. So sometimes referred to as value investing as well. And trying to understand the regular markets is difficult, insanely difficult. Trying to understand the crypto market is even more so, because it's still such a small market, and it's a space in which retail can come in and out of, which we're going to talk about that a little bit later as well. Retail can come in and out of super, super easy. So it's interesting, because I think one of the complaints that some of the bigger institutionals have had with Robinhood, for instance, and Webull coming into the stock markets, you get all these retail people coming in and you start seeing this Robinhood effect they'll talk about, where, retail is typically more predictable, actually, because most retail investors, the average Joe, is responding emotionally to things, whereas, institutionals are running deep analysis and also, often even using algorithms to do their trading, especially their high frequency trading. But anyway, there's been, instances within the stock market where they talk about the Robinhood effect, where even that may have happened with Tesla, where retail just drives the price of things up, and they can do it now, and they can do it more quickly because they have quick access and low fees, and so they can trade. And you go into the crypto space, and it's even more so the case, right? You didn't have as much of the institutionals to begin with. It was more of a retail space, and that creates the volatility, because retail investors have weak hands, and a price starts to drop of an asset that they hold, and they panic, and they panic sell, and typically in mass, and everybody starts to panic. Or there's a lot of people out there that are just kind of, I don't know, think of them as goofballs a little bit, some of them, but they're trying to do the pump and dump kind of thing. They're just trying to get rich quick. They're not trying to invest. They're not looking to make long-term gains. They're just looking to find something that's going to pump 100%, 1,000%, especially every bull market this happens, and so instead of going out and doing research and looking at the crypto company, crypto projects that are out there, and having more of a Buffett approach and saying, all right, this one looks good, I'm going to invest in it. It's just a hunt that new super small cap coin that just launched that I could throw some, $500,000 in and see 1,000% gains and walk away with a nice chunk of change. And in essence, what's happening there is you're taking money from other people when that happens. There's nothing wrong with it, I wouldn't say, or immoral, because everybody knows what they're doing. Everybody knows how the game, that's part of what they're doing and partaking in. And so they know there's high risk, no high reward. They know, you might be able to pull out at the right time and walk away with that nice fat increase, or you might miss it. And you might be the person giving the other person, or the early person, the early whale who either mined the crap out of a coin, or just, if it was not a mineable coin, but like an ETH token, just purchased a bunch at launch or in an initial offering or whatever. You might be the person giving them, they're taking your money, in other words. So you might be on either side. But anyway, got a little bit on a rabbit trail or a sidetrack there. kind of like an occlusion. Well, let's circle back and get back to the market. We stopped with Cardano. Moving on to Binance Coin, it is seeing just no movement. It's $264.75. Polkadot up 5.53%. It is now $38.13. XRP down 2.57%, 47 cents. Uniswap is $30.72, slightly up. Litecoin holding at $201, $201.69. Chainlink $29.96, up slightly. So we're seeing a bit of green mixed with some red. All right, let's see if there's any outliers as we drop down in the top 20. Yeah, Theta token. Theta has been on fire. Theta is up 14.87%. I've talked about Theta, I think, probably almost every day. I do like the concept of the Theta platform. It's a YouTube alternative. It allows for content creators to get monetized for the content that they create. It allows users to earn crypto just for watching video. It protects content creators from being deplatformed and demonetized, and it protects users from becoming the product of the service. With so many of the top social media platforms on the internet that are owned by the major corporations, we use them because we like the content. We like that they're free. They draw us in. I mean, they spend millions of dollars doing research to figure out how to get us there and to keep us there, how to keep us clicking, how to keep us scrolling, how to grab our attention. And not just that, then how to harvest our information, figure out who we are, what we like, what we buy, where we go, who our friends are. Sometimes even going to the extent of coming through our emails and our private messages that aren't private, our text messages, our instant messages, and possibly even listening to our devices and then targeting us with those ads. So Theta video platform, providing streaming video peer-to-peer, really great stuff. Happy to see this thing move up because there's a number of projects like this. There's Theta, there's Library, there's BitChute, there's a number of them. I think Library would be another really, really great one that just hasn't gotten the attention as of yet. And it is a mineable token, which is interesting. And you can run nodes and you can stream and do a lot of the same, very similar things with Theta. However, for this type of thing to really take off, what we actually need is like explosive growth because we need a ton of users running nodes on those platforms in order to make the tech work, in order to make the streaming usable. So to see Theta like at number 14 now in market cap, actually pretty exciting. Like it's really exciting. It excites me a lot because I'd like to see, even if it wasn't Theta, whoever it is, if it ends up being Theta, great. Theta.tv is where you go. I didn't plan to talk about Theta so much, but here I did. Here we go. Theta.tv, go sign up for an account, watch some streaming. I've got like one video up there right now. You can go follow and like blockthrasher on there as well. I'm when things are a little less crazy, I'm gonna spend some time getting the content up there on a regular basis. It's more of live streaming, I think, right now because at the moment you can only upload like one video a week or something like this. So those are the things that, there's a few things that need to be improved and that, this will happen with more adoption as more people use it. So check out Theta. Yeah. Terra Luna's tearing it up. It's up 11.63% to $20.86. And crypto.com, crypto coin, CRO, is doing well, up 7.72%. The last I will mention today is Avalanche. We talked about Avalanche just the other day in our staking podcast on what the staking options are, and it's a good platform. It's up 11.67%, $36.47. All right, moving on to the news items of the day. This should be pretty quick. There's not a ton of stuff to talk about in the news. Sort of a slow day. There's some analysis here that I like that I'm going to share with you guys. This coming from EthereumWorldNews.com. And it is this, that the altcoin market cap could grow by 27,000% in 1 year, according to the crypto analyst Rect Capital. The altcoin market cap broke past its 2017 highs in early February to post a high at 684 billion. It retested the 2017 highs as support in late February broke, taking off again, and is currently at 684 billion. However, here's where it gets interesting. According to Rect Capital, the altcoin market cap could be gearing up for something spectacular based on a similar retest of an old all-time high in late 2016. And the one thing that I thought about when I was looking at this, though, was we had that IPO craze going on there that drove a lot of that within the altcoin space. Now, we've got something going similar now with DeFi, for sure. And the lending protocols and the liquidity farming and a lot of things that could draw, because what has to happen is we have to see the Bitcoin dominance drop and the altcoins rise up a bit for this to happen. So according to Rect Capital, if history repeats itself, the altcoin market cap could grow by, this is a huge number. Get ready for this. Are you sitting down? 27,000% in 1 year. Now, if that happens, I think there's going to be just a few people beyond ecstatic, wanting to throw some parties, right? I mean, that would 27,000%. I mean, if you're in a couple of the winners in the alt market that do that, and at some point, someday, I'm convinced. All right, just pause for a second. I am convinced that Bitcoin has its early mover advantage, which is great. There's going to be a special place in everyone who's in crypto's heart for Bitcoin, because it's the OG, it's the first. It's got a lot of attention currently. It's got institutional adoption that's greater than a lot of others because of its first mover advantage. But those are not things that can't change. There's nothing about that. There's nothing about Bitcoin, technically speaking, or from a team standpoint, there's just that makes it certain that it's going to always be the king and always be dominant. Now, might we see that happen? We might. However, what gives value to crypto? What gives value to anything? The cold hard truth is nothing has intrinsic value. I mean, beyond food, which you can eat when you're hungry, but even when you're hungry, sometimes people turn away food. No, I don't know. Or you have enough food. You got enough food. You got a warehouse full of food. You don't need any more food. At that point, food has no more value. Gold. What gives gold value? You can make jewelry with it? Nothing. It's perception. At the end of the day, it's how people think about something. It's whether they want it or not. It's driven by desire. If there's enough people, if there's demand, bottom line, that's it. That's what value is about. And with crypto, it's the same thing. Bitcoin has value because of network effect, which is another way of saying demand, desire, desirability. People want it. Now, it has certain aspects to it that are reasons why people want it. They want it because of its limited supply of 21 million. Other cryptos have that same thing. People want it because it's fungible. Other cryptos have that same thing. People want it because it's non-confiscatable. Other cryptos have that same thing. People want it because it's borderless. You can take it across countries. Not all cryptos have this. Other cryptos have the same thing. It's really a fight for adoption. It's a fight for community. Who can grow the biggest community? Who can draw the most attention? Who can build the best? Now, there are factors that happen that influence that. Good technology, a good team, a huge marketing budget. See, that's another thing with these third generation cryptos like Cardano and Polkadot and others. built-in mechanism for marketing because there's a foundation and there's a fund. There are funds, that money that's been set aside to market the crap out of them, right? To bring in new developers. This is important. That's connected to the governance issue. All of this means, I know now, the Bitcoin maximalists out there, the guys that were in early, typically, if you see a Bitcoin maximalist, it's because they've been in Bitcoin since 2014, 2015, 16, and I know their attitude is this is all eroding the market. It's pulling value out of Bitcoin, and so they call them shitcoins, right? And the only thing that rhymes with shitcoin though is Bitcoin. Oh boy. I'm gonna make some enemies here. Don't get me wrong. I'm rooting for Bitcoin too. I think it's ridiculous to want there to be just one cryptocurrency, because there's a lot of really good, life-changing, like world-changing, even potentially things that can be done with some of the altcoins and are being done. That's the bigger issue. Like when you actually analyze what's going on out there in the world today with cryptocurrency, Cardano going into Africa potentially and giving people identity opportunities they haven't had, or the ability of, there's others out there that come to mind, that even Dash at one point was really big in Venezuela because, the Bolivar was crashing and super hyperinflationary, and people Bitcoin wasn't working well. I mean, for some, but because of high transaction speeds or fiat, whatever, Dash became really popular there amongst their people for them to transfer their value and to protect themselves and to provide a store of wealth, of their wealth, so they could get out of the Bolivar and escape the hyperinflation that was going on there. Anyway, I digress. Enough on that. Back to this issue of what could happen in the altcoin space. According to Rect Capital, excuse me for just a moment, I've got to plug in or I'm going to lose. All right. Bitcoin has more or less stolen the spotlight since it broke the crucial 10K ceiling back in July of last year. The king of crypto has gone on to blast through several resistances, including 20K, 30K, 50K, and 60K, to set an all-time high of 61,816. That was the Binance rate on the 13th of this month. So the all-time high on Binance was 61,816. However, unbeknownst to many crypto traders, is that the altcoin market capitalization has also been rising from around 137 billion in July of 2020 to a new all-time high of 684 billion on the 18th of this month. Along the way, the altcoin market capitalization zoomed past the 2017 all-time high of 473 billion in early February this year, only to soon retest it at support around the 27th of the same month. It is with this event that Bitcoin and crypto analyst Rect Capital believes that such a retest of an old all-time high could cause the altcoin market cap to grow by thousands of percentage points. Rect Capital shared his analysis through the following tweet. So he's looking at what happened in 2016, really, saying the last time altcoin market cap tested old all-time high as support, it rallied plus 27,000% in just over a year. In recent weeks, altcoin market cap has successfully retested its old. Okay, so could he be right? I guess that's the big question. I don't like to make predictions, but this is a lot of those predictions. People are like, I think the Bitcoin's going to hit, and they got no actual analysis or anything. Like, at least with Rect Capital here, he's got some stuff going on and some history with the market. But here's the thing. I'm not going to say this isn't a prediction that couldn't be true. Absolutely, totally could be true. But there's so many big things going on with adoption now that it could even. I mean, this could even be this 27,000% prediction. It could be just way off, like way too low on the one hand. And then the other hand, we could have some sort of, black swan event, some sort of like really, 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 really negative or a combination of really negative things that happen that just cause the market to tank again. And then it may be some time before it comes back again. as we've seen happen in the past. I don't think that's going to happen this time, but it could. That's what we're dealing with here, is nobody really knows. But it is fun. It is fun to run some numbers and to look at this and go, okay, this analysis is based on the altcoin market capitalization, retesting all-time high in 2016. If you're looking at the video, if you're watching this on YouTube instead of the podcast, you can see the chart there. Last time it broke through that resistance in 2017, boom, shot up again, and we're back there again. And boy, the pattern of the chart, it does look like we're at the same spot. I mean, it's almost eerily identical if you look at that time frame from 2014, the all-time high then, to 2017 when it broke past the all-time high again, and then just shot up and reached that new all-time high in 2017, and boom, down, back. I mean, it is interesting. Definitely. Chart here is interesting. Anyway, hey, we can hope, right? All right, moving on to the next story of the day. Sometimes people get a little bit confused, I think, because they see these stories about the Federal Reserve making positive statements about digital currencies, and they think, oh, wow, that's good. That's good for crypto, but it's not necessarily. So this is a story today from Crypto Slate. The U.S. Federal Reserve says digital currencies can coexist with cash. But what are they talking about when they're talking about digital currencies? Are they talking about Bitcoin? Are they talking about Ethereum? Are they talking about Cardano? No. The head of the Central Bank Authority said CBDCs, so central bank digital currencies, can be allowed to exist as long as they are regulated and function alongside fiat currencies. But see, this is the part that's just doesn't make any sense. A central bank digital currency, of course it's going to be regulated. It's from the central bank, which is the regulatory entity. Anyway, Jerome Powell, head of the U.S. Federal Reserve, said state-backed digital currencies and official central bank digital currencies. What if he means state-backed as in U.S. states, I sort of doubt it. I think he's talking about the federal governments of, Anyway, said these currencies and official central digital bank currencies, CBDCs, can function alongside fiat money in the coming years, as per a report on business outlet Bloomberg. Central bank digital currencies are gonna be fiat money, though. That's what it means. Fiat, out of nothing. It means that it's backed by law. That's what gives it value. It gives it the value is derived by the fact that it is the legal tender, as declared by the U.S. government. It is for purchasing, for paying taxes. But the central bank digital currencies, when the Federal Reserve creates a digital currency, it's going to be no different. It's going to be more. If there's ever was a fiat, it's going to be that. It's going to be that because it's going to. Well, you know what? If you want to learn more about what fiat actually means and why crypto's not fiat, because some people will say that too. Well, crypto's fiat. It's created out of nothing. To an extent, that's true. I mean, when a project launches, there's a pre-mine or there's a supply, and then there's a release of that supply, and they have economics to go with that. But here's the thing. They're not fiat because they're not backed by government. The value is only derived by the use of that coin and by the attention they can attract, by the network they can build of people, of community. It's going back to what I was talking about before. And with the dollar and the other fiat currencies of the world, it's not like that. They have that value because the government has declared them to have that value, and it's forced upon you. This is what you will use, and you will be taxed in this currency, and you will pay in this currency. And so even if you decided to go bankless and go dollarless and operate on all crypto or whatever, if you were trading, I don't know, food, whatever it was, baseball cards, you'd still have to convert into US dollars at the end of the year to pay your taxes. And so that's what gives it value. Anyway, Powell made these comments in a pre-recorded video to a payments conference in Basel, Switzerland, which is, by the way, where the Bank of International Settlements is. If you haven't ever looked into the Bank of International Settlements, you should. If you have any doubt that we have a global government, like a one world government, we do, economically speaking, and much of that power is held within the Bank of International Settlements, which is the central bank to the central banks. Check it out. Maybe I'll do an episode on it one day and go into detail. So he was there. Probably at, I would not be surprised, I don't know, it doesn't state that. Could have been there at the Bank of International Settlements. Anyway, he was in Basel, Switzerland, amidst a bigger institutional push for cryptocurrencies and Bitcoin in recent times. CBDCs are theorized as fiat-backed stablecoins that are directly controlled and issued by the state. Here's where it gets kind of scary. You know, I was thinking about this. What are the positives? What are the negatives? Well, I mean, it could be maybe a positive in that you could swap it for Bitcoin, etc. You know, but here's the thing. I think that central banks, Federal Reserve, would love the idea of a CBDC. Because think about it. With cash, they don't know what you're buying. They don't know what you're selling. There's still an element of privacy. Probably one of the most private things you can do, even more private than most crypto, at least crypto that, you know, can be subject to chain analysis where you can go and look at the blockchain database record and history and see what's happening, where money's moving back and forth. It's cash. I mean, if I go and I withdraw cash from the ATM and I meet you and I buy something from you, nobody has any idea, right? Totally private. So here's the thing. With the CBDCs, all transactions will be viewable on a blockchain, and these are likely to serve as a faster, more traceable method of selling funds compared to cash. However, may not be as accessible or inclusive to use as Bitcoin or other public cryptocurrencies. So yeah, here's the thing. It's going to all be tracked on the blockchain, but it's not going to be publicly available. Like, we're not going to be able to see that. It's just going to be a closed, permissioned blockchain that the Federal Reserve will operate. But yeah, they love it. They can see every dime and every dime. It'll be every dime, every penny, every transaction you ever make. Talk about making it easy to tax. You know, that'd be great. Of course they're going to go for that. Now, that doesn't necessarily mean that they're warming up to the idea of digital currencies as in Bitcoin, Ethereum, etc. At this point, I think it's highly likely within the United States that they're going to really take some draconian steps to try to shut crypto down. But the path might be more along the lines of, let's make an attempt to overtake it, right? To nullify it, to make crypto unnecessary by attempting to provide all of the positive aspects that crypto can bring. In this, I think they're misguided, because what they and they probably realize, but it isn't the technological aspects of crypto that draw people. I mean, that's an aspect, but it's the fact that it's not manipulated and it's not controlled by a central authority and a central entity, that it's not issued at will, that we know. Here's one aspect where crypto is so unique, is that the predictability of it. Sure, it's a volatile market right now, so people will go like, well, look at the price of Bitcoin. It's not stable enough. It's not predictable enough. Yeah. But actually, we have a little bit of a story, and I can move on. I'm spending a lot of time on this stuff here. But anyway, we know how many Bitcoin there are going to be. We don't know how many dollars there are going to be. And if there's a central bank digital currency, CBDC dollar, it's going to be insane. Like, it's going to be that the restraint will be even less. Let's just put it that way in the creation of the money. And they're going to expand the money supply and just, I believe it would just go nuts in that regard. Enough about that. Moving on. Morgan Stanley. All right, so Morgan Stanley's in the news every single day, it seems like, and that's just because they have warmed up to crypto, and they are one of the biggest institutions that are allowing their clients to invest in crypto. But there's a caveat, there's a catch. All right, the Wall Street behemoth Morgan Stanley is reportedly looking to double down its support for the crypto industry by acquiring a stake in Bithumb. Just a few days after news broke that Morgan Stanley will enable its institutional clients to buy Bitcoin, the giant investment bank has reportedly started negotiations to purchase a stake in the largest South Korean cryptocurrency exchange, Bitcoin. All right, good stuff. You know, like to see this. However, there's a caveat to this with Morgan Stanley, and it illustrates something that we've seen some other countries, I think it was South Korea, was talking about a similar thing, but in a regulatory way. This is not a regulatory way, but here's the deal with Morgan Stanley. You can invest in crypto if you're one of their clients, if you're rich enough. Okay? But it's only for those people that meet certain criteria. Morgan Stanley is said to become the first large bank in the United States to offer its wealth management clients access to Bitcoin funds. The investment bank, which has over $4 trillion in client assets, has reportedly told financial advisors in an internal memo the bank is giving wealthy clients access to 3 funds that allow them to own Bitcoin. According to the CNBC, the move is being made after Morgan Stanley's clients demanded exposure to the flagship cryptocurrency after its massive rally that started late last year and saw the price of Bitcoin go from 11,000 to 61,800. The rally reportedly pressured Wall Street firms to consider getting involved in the nascent asset class. Morgan Stanley is, for now, allowing clients, here it is, with an aggressive risk tolerance and over $2 million in assets held at the firm to gain exposure to crypto. Investment firms, on the other hand, will need at least $5 million at the bank to qualify. Before investing in funds, the accounts have to be at least 6 months old. I tell you what, this is a big deal in this way. One of the things that makes crypto so exciting is the fact that you don't have to be a qualified investor. You don't have to be a multi-millionaire to get in. But that's what a lot of these institutions and some of the regulatory agencies and other places around the world, and we've covered other stories in the past about this, want to do. They want to lock the regular guy out. They just, you know what? That kind of income, that kind of money, that's only for wealthy people. Earning passive income through getting on into a rapidly growing space with innovative technology, that's not for you. If you just a regular guy that works your butt off every day at a job, to provide for your family, and you wanna jump in, now that's for us, for the wealthy already, and so that's one of the things about crypto is it's not non-discriminatory. Okay, this is discriminatory basically. This is like the opportunities are only going to be available for those who already have the money. It's just it's crazy. It's crazy. All right, I'm done with that. I digress. This is interesting. Another analyst, Plan B, and goes by the name of Plan B, who was the first one to talk about the stock-to-flow concept with Bitcoin, is predicting that the price will rise above the controversial stock-to-flow forecast. This analyst who first applied the stock-to-flow model to Bitcoin says the top cryptocurrency is set to rise 5 times from its current levels. According to the pseudonymous analyst Plan B, BTC will blow past the 100,000 price level predicted by his original S2F model, as well as rise above 288,000, which is the target price in his modified S2FX forecast. He says, we are only 3.5 months into the Bitcoin bull market. In my opinion, Bitcoin will not stop at 100,000 and will continue to S2FX 288,000 average price level. The all-time high, however, will be higher. So the model that he uses, the S2FF, compares the amount of a commodity. This is what this is what the stock-to-flow concept does. It compares the amount of a commodity in circulation divided by the amount produced every year. It is traditionally used to analyze the intrinsic value of precious metals such as gold and silver. So Plan B published his most recent S2FX model in April of 2020, where he predicted that Bitcoin will reach a market capitalization of 5.5 trillion. Wow, so 5x from where it is now, and a price of 288,000 between 2020 and 2024, when the next halving will occur. At the time, Bitcoin. Interesting. The analyst, who says he's a Dutchman in his mid-40s and a member of an institutional investment team that manages roughly 100 billion in assets, believes anyone considering adding Bitcoin to their portfolio should pay attention to its risk-reward ratio. And this was actually good. This is good. So pay attention to this for a sec. Key thing is not Bitcoin's high-risk volatility, he says, but that return is higher than risk. The asymmetry. Even if you only invest 5% of your portfolio and thus can only max lose 5%, average portfolio return is plus 20%. Bitcoin is the only asset I know with this large of an asymmetry. So, and I like what he's saying. Yeah, it's volatile. Yeah, there's high risk, high reward. But if you look at the actual numbers and you go back and you chart it out, Bitcoin on average portfolio brings a return 20 plus 20%. And so while the risk is high, the returns are good if you have the ability to stomach the drops and to stick with it over time. Good stuff. And this just reminded me, the other thing about Morgan Stanley with their investors, they're only allowing them to invest something like 2%, right? So they're also putting controls on how much. Anyway, all right, just do a quick coin highlight of the day because it's in the news. This Grumpy Cat meme coin raises $70,000 for animal shelters. So some cool stuff here, but also just a little bit of a, I don't know, maybe a warning. The Grumpy Cat NFT fetched more than $80,000, while the Grumpy Cat coin community raised more than $70,000 for an animal shelter. The community behind the meme cryptocurrency Grumpy Cat coin, or Grumpy, has donated 39 ETH, worth almost $70,000, to the Stirring Animal Shelter in Massachusetts. Owing to the fluctuating price of Grumpy, that's about $10,000 less than the estimated in their social post below. And this is great, but it's nothing. I mean, the amount of money that came into Grumpy Coin, we'll see that here in just a bit, was pretty significant. And to only raise $70,000 is not so significant. Anyway, according to one of their Twitter posts, they said, our very first charity drive is now ended. $150 billion, roughly $80,000 in Grumpy was raised to save kittens for Sterling Animal Shelter. I mean, meow. Okay, cool. This is good stuff. The meme coin is based on Tartar Sauce, the internet celebrity cat famous for her perpetual grumpy appearance. So obviously they're pulling from DOGE. We're the cat now. Grumpy. On the project's website, grumpy.finance, the team states their focus is on making successful efforts for all our community members as well as the world by giving back. The coin was listed on Uniswap, it's just an Ethereum token, this month, and Grumpy was added to CoinGecko on March 16th. It surged by 1,000%, taking the market cap from 5 million to 50 million. See, this is what I'm saying. Total market cap at 50 million and only 70,000 raised. I hope they end up doing better than that. Anyway, it had a trading volume of more than 18 million on March 17th. Currently, the price sits at 0.000000050, down 30% from its high of 0.0000074 2 days ago. So that might not seem like a high price, but the total supply is 100 trillion. This was a typo in this article, but if we look at CoinGecko, the supply is 100 trillion. 100 trillion. Massive, massive, massive supply on this Grumpy token. Anyway, current market cap, where's that at? Where is that listed? Oh, question mark. Not sure. Don't know. Okay. CoinGecko doesn't have the data. Anyway, this, if we look at their website, grumpy.finance, the idea, it's kind of cool. I like it a little bit. I mean, here we go. It earned passive income, giving back to cats in need. So the idea of this thing is that Grumpy charges a 1% transaction fee, and then it takes that and redistributes that fee to existing Grumpy holders instantly and automatically. So I don't know. I guess there's a charity wallet, and that's what happens here with how the users, the community, is supposed to give back. They say they are a very active in their community and strive to develop trust by being transparent in their mission and goals. Okay, a community that's helping animals who need it most. But what it looks like is that the transaction fees go back to the users, right? Now, if it was such that the transaction fee went to some sort of foundation or fund that was to do what they say they're about, which is send money to organizations that, like the Sterling Animal Shelter, to help with what they do to help animals, this would make sense. But this has all the markings of a creative way to do what we talked about earlier today. Get in early, create a coin, launch it, get in early, a meme coin, drive it through TikTok. Oh, it's so cute. It's for cats. Get all the little, young people on TikTok, the girls that are, oh, I love cats. Bring in a bunch of money, draw a bunch of attention, possibly even do a rug pull. CoinGecko has a warning about that. Kindly be aware that the liquidity provided in automated money market platforms, Uniswap, etc., can be subject to rug pull, etc. I just don't know. I mean, who knows? Maybe this team has good intentions. Maybe this thing will go somewhere and do good. I hope so. But I would say have some caution about it. People have made insane amounts of money with sort of that, buy in, buy early, buy a bunch for nothing, and as it pumps, get out, dump. And for those who are able to do that, awesome. That's not investing. That's taking advantage of an opportunity. That's somebody else's money, putting it in, that maybe believes, like in this case, that it's about doing good for animals. Again, there's a market. It's a free market. That's how it works. It's the beauty of it. Make what you can make. Do good with it when you do. That's what crypto's about. Give back. So anyway, check it out if you like. If you're a cat lover, keep an eye on this. Maybe it becomes something really legit and they start raising a ton of money for these animal shelters around the country. That'd be great. Love to see good. Love to see good being done within the cryptocurrency community and space. Okay, friends, thank you so much for your time. I'm going to hit the road again, moving on to Wyoming today. Appreciate you all. Please be sure to subscribe and share the podcast, the YouTube channel, Facebook group, wherever you're at. Love you all. Hope you have a great day. Remember, it's always a great day to earn, stack more crypto. And I will talk to you tomorrow. See you soon. Bye now.